Hey, it's the Crypto Sniper. How are you guys doing? Oh, trader's life, isn't it terrible? Indeed not. By the way, hit us up a like if you would, please. We're going to give you a quick crypto update. But while I'm here, I'll just show you the beautiful land that is Cape Town of South Africa. Join me in reveling in the view. Why have we started on the Dixie chart, you might ask? Well, it's about the dollar. Remember, I keep talking about the macro as we take in Table Mountain and the tablecloth. It's about the dollar, and I gave this update on the Market Sniper, but so there'll be a small amount of overlap here. But I wanted to make sure that crypto guys got this, because some of you don't follow the Market Sniper, even though I think you should. By the way, at the Market Sniper on both Twitter and YouTube, go and hit the sub and hit always, and you will be unsubscribed. So keep hitting always. Why is this important? Because the down leg in the dollar versus the rest of the currencies it's being measured against. Remember, it's an index against euro, GBP, yen, the Swiss franc, etc. You've got to blow off, and I'm going to recap this very quickly, but it was in the Market Sniper video, but many of you, as I say, might not have seen that. So just to summarize, wedge squeezing higher over here. So let's just grab that line correctly. Wedge squeezing higher. We pop out the top. We exhaust after we run key levels, 109. Which is also, by the way, the interim level for our draw. So we make the second interim. We have a pullback, but instead of an absolute spiller, which is often localized highs that you get if you get an rising wedge with a pop out the top, it's often like a final exhaustion, final push out. You know, it's really, can't anymore. We're done. When you get that, it's typically a localized high. When you get what we've got here, what you've actually had is a rest channel. And that's the channel we drawn. And yesterday, as I highlighted in the Market Sniper, after the Bidenomics dump the fuel, the strategic oil preserve, most of the inflation that was only flat was the fact that fuel and aviation fuel went down. Actually, living costs, rents, go ask all those Americans who are having to rent a new place where they had got cheaper in the month, all have actually continued at the same rate. So you had part of the index of CPI go down and part of it continuing to go up, and you aggregate it out at a zero. The full story is in the movements and the rotations within, and which part of it went down and whether it's going to stay down. So also, as Biden was discussing, and as I mentioned again on the Market Sniper, so slight recap just on the macro for the crypto kiddies who are not involved with that as much. As he is going into midterms coming soon, he wants to look like the inflation is no longer a matter, they are winning. You create a statistic, but that statistic won't necessarily hold too long. OPEC said, hey, we will throttle the amount of release that we do ourselves to maintain prices at the current levels. So what will end up happening is if Biden increases supply by releasing strategic reserves, OPEC will throttle back in time. So he gets away with it the once, but he won't get away with it on a repeated occasion. This breakout is key because that shows that the channel has now surrendered on the downside. And you got a warning actually, because here was your last low. This is what we typically call a marginally lower low, a nice tweezer bottom there with a hammer, and it didn't get as far down into the range as all these other places here where I've written the text. Why have I got the word text? That should be a breakout. I think that can go, shall we? We don't need to say text over here. This is like a Biden teleprompter reader. Read the next line. Ooh, I just said, read the next line. Oh dear, okay. Enough of that, Francis. So we'll take the text out there because I think it said something once, but I can't remember what I would have said. So you're bouncing on the roof of the rising wedge there, and then you fizzled over. So there was another rising wedge with a spill. That was the inflation numbers. But actually, now, everyone's back in the dollar. Or more importantly, the euro is surrendering further again, and their numbers are going to be terrible. So what's this got to do with crypto? It's all about macro in the crypto world. Hey, the choppers are out. So let's have a look at the Bitcoin. Okay, we're back on Bitcoin. So let's have a look at this. So what have we warned? Key levels just run 25k on Bitcoin, 2k on Ethereum. Key levels just run. And remember, guys, this Bitcoin up move has been in the environment of a weakening dollar. A dollar index that hit 109 and fell to 104. This is not spectacular at all, because in FX terms, the 109 to 104 move is substantial. In crypto terms, the movement you've got out of Bitcoin is not substantial. It's not substantial. In percentage terms, remember it's a higher beta, you may think, it's a good percentage move. It's not substantial. Particularly in Ethereum, you might say, well, that's a bloody good, we traded sub 1,000 and it tapped out at 2,000. Nothing wrong with getting a doubler, but the point is, it is a rally. It is a rally in our default opinion in a counter trend move. So you've got this rising wedge, and I've spoken of the rising wedge concept in the last video, and I'm reiterating this. You could include this part of it as well into the base of the wedge as well. I could have drawn it like that. And this is your big concern. There is buy up coming, but lack of follow through. So what does this point to? Here's your buyers. We put them in an arrow. We put them in green. Here they're coming up under the market. They're coming up here. You failed to make a new low there. You got quite a bit of buying on the number. Now, remember, if I put the eye back on, a lot of technical levels are going to come back in that I've drawn. But you ran 4 key levels of significance in the spiller. You ran, let's cover them again. You ran the 20K. You ran the legacy high of 2017 December, the 19,700K. Yes, you bounced on our second interim of the first cup gold nugget, the original 2.5 year up break. That's right, the second interim on that level. And there's another one. There's another one in there. What's it? What have I forgotten? 20K, 19, the legacy high. Second interim. Oh yes, the flag, the downside flag target was also just made. That was from the previous flag to the left. I'm not going to take you back. I've done so much work on showing you the flags. So flag target on the macro flag target. So this is your concern. This is a basing ascending grind line. And at the same moment, as you're tapping out at the 25K level, remember that high there, around about 25,200, you're being chopped, you're being chopped, you're being chopped, you're being chopped. Selling wicks, shooting star, bigger shooting star rejection, selling wicks, try again, selling wicks, shooting star, massive rejection, shooting star on this time frame. And if you put it on the daily, it's not dissimilar. You've almost got 1, 2, 3 shooting stars in a row there after running the key technical level. This is very common that happens. I'll put it back in place there like it was. Now Ethereum, different story, lots more fundamentals, lots more, hey, excitement, it's going great, we've got some big stuff going on. It's been super cool. The merge, you guys will probably know even more about that. I don't follow the narrative until the price behavior is correct. Even steeper climb. Isn't it interesting that they're both making just key levels of significance? There's your 2K. Bitcoin 25, Ethereum 2K. This is going to be the Maginot line, which I, in this instance, do not expect to see fall near as easily as what you've had, and will face the likelihood of a firming up dollar. The other point that's a major problem for crypto, and I'm going to come to this in a second, is crypto is underperforming the stinky stoink market. The stocks are going up. The NASDAQ stocks are going up. Look at this rising wedge again at 20K. This is a rejection candle. You went back up here. You got turned around. So you opened here, traded up to there, got smashed back down, bit of a gravestone doji at that point, and then pushed further down. And now you're hanging eerily and uneasily. The news out of China is terrible. It is terrible. Yes, and it will affect that Hong Kong dollar that's in our Market Sniper videos. As I say, don't forget to watch all of this. You could also extend this. I've made this a bit steep here, but you could extend that from a basing point. So this was support. How low did you trade? You traded below 888s. The Chinese would have bought that number. But there you were. And now you made $2,000. So it's not to say it wasn't a great trade had you bought the exact bottom. No one would have bought the exact bottom. You did get a W low here on Ethereum, which was clearly made. You could have done that, for example, around about the 1,000 level to the 1275, and then you would have had a further 275 projection to the upside. There's somebody who wants to be in my movie here in the background. Anyway, so 275 up from the 1275, it would have clearly taken you to around about the 1550s. So you would have certainly got these highs over here, and you've squeezed higher. This is not the time to be buying Ethereum right now. Again, we spoke of the rising wedges, and people said, no, you're always a bear, perma bear. Listen, I've been bull for an extended period. We had a 2.5 year bull setup that we called at 9K to go long, saying it's going to blast through 26,000, which it certainly did. We were very bullish for an extended period. We don't hate on crypto. It's just don't believe. Don't become a believer. Things are getting controlled. If they weren't started that way, they've certainly becoming that way. If you want adoption and you want institutions, it's got to fall under the control structure, and that's already happening and it's in place. So, by the way, other places where we've suggested shorts. For example, if we go to Maker and we have a little peek at this one. This guy is rolling over as well. Very similar type structures. There's the basing ascending grind line. You're already in a break on that one. There's your wedge. The angles vary slightly, but the structure is pretty much the same. So you're actually pipping through a little bit there. Little bit of pippy in the pants. Oh dear, it started already. Squeeze that bladder. If we go and have a look at Elrond over here. Also, these are not typically safe bottoms. At a point where dollar, which is where we started this clip, is beginning to reassert again. Dollar is beginning to reassert again. Now, just because it broke out that channel, the Dixie, doesn't mean it doesn't come back for a little revisit and go. So you might get a little bit up here, and then you go, he's wrong, he's wrong. We're not talking for the next 15 minutes. We're not talking for the next hour and a half. We're not even talking the next 4 hours. It could be a day. It could be 3 days. But on the longer run side, we fear that this is going to revisit down here. And it looks worse for crypto. So I want to highlight this differential. Crypto is underperforming the NASDAQ tech stocks, which is how the institutions view it. A high beta take on technology-based mines. That's how they view it. It's a high beta version of a technology-based beehive that they're buying into with crypto. So if we go, let's take BTC and we divide it by the IXIC, NASDAQ composite. This is what you're getting, guys. This is what you're getting. You want to call that a bottom? Well, then you would be calling this inverted HVF a bottom as well. And you won't know too much about HVF and you aren't in our community. To be in our community, by the way, www.themarketsniper.com. Hit that link, book a call, have a chat, talk to somebody just like you. We don't need hire salespeople. We have community members that talk to new potential communities members. They know what to ask. They'll make sure you're in a stable state of mind, and at the same time give you all the details, take you for a nice tour through what you'll actually get. Plus, as I say, you have a return of money up to 14 days. So, we don't want anybody who doesn't want to be there. If it's not adding value and you don't think we're any good, then you don't need to be part of it. And you can just take our view and make of it what you will. You can shitpost in the comments if you like. So this is hanging to the bottom there. This is not good. This is not good. Go and look at what the NASDAQ did and what Bitcoin is doing. It's not holding up its proxy. And it made 25K and it's underperforming tech. What happens if tech starts another down leg now? People start realizing this China story is really, really bad. Oh yes, Evergrande. Buy a piece of land, get planning, release a brochure, receive the funds for all the apartments. Instead of start building, go and secure another piece of land, create another brochure, receive funds, off plan, selling the apartments, continue, add on, leverage, and then slowly start some building in some places. And guess what? People say, you haven't even started on mine, or you've stopped building on mine. I'm stopping to pay Whoopsie. Now you have a problem. Now you have the government telling the banks to lend to the developers. The developers say, the banks say, well, these developers look bust. They've taken all the money. They've taken big fat dividends. They've become the biggest businesses in the world, but they haven't built half of what? They're long on the cash they've already received and short on delivering the structures. These guys in China have run a 2022 Ponzi scheme that will make the GFC of America look embarrassing in terms of leverage, ninja loans and everything. These guys have leverage like you've never seen before. So the banks say, well, do you want to break us by lending to these people that we don't want to lend to? Or do you want to break the developers? Because if you force us to lend to these guys who are behind and they've had to take down entire development sites, there's videos where you can go and see big plots of land with 14 skyscrapers all simultaneously doing a World Trade 7 implode on themselves situation. Because they didn't build so great. Didn't pass safety standards. Let's do it again. Good luck. Good luck trying to recover that copper, that concrete and everything and having to redo. Man, oh man. Guys, you have no idea conceptually what's going on in the East. This is highly disinflationary and it will cotton on. Remember how we relied on China to get super indebted and build for the world, buy for the world. That's why Australia didn't really have such a big, great financial crisis, because everything was being bought. Ores, cements, coppers, you name it. They were hoovering it up from the lows. And everyone was talking about China, the new great economy, etc., etc., while they were maxing out their credit card and funding, building cities into the future. Well, here you are. Anyway, go and check our Real Vision, if you've got the Real Vision video on the Hong Kong dollar, where we touch on some of those things. So this, my friends, is not good performance relative to a tech. This is garbage. This is garbage. And you're supposed to have bright people developing the new business railway lines. Yes, all these fundamental exciting things. But the market technically says no. The market technically says no. What this needs to do to turn it around is to do some form of basing. You certainly have to first get above that line. You have to get back up the top and you have to break out of this level. So here's two lines that would have to clear. This is just a basic. It still doesn't mean it's fixed. Then you have to break out of this valuation. You need to get out of the twos. Let's just remind you how much of the NASDAQ Bitcoin bought for you at the top when it was 64K. And note, I said 64, not 69. Why did I say that? Because it was underperforming at the 69K. That's the 69K. You got 4.4. You got up to 4.6. One Bitcoin bought you 4.6 baskets of the total NASDAQ composite, guys. Look at that on the big time technically and call that a bottom for me, please. Tell me I'm wrong. On balance of probabilities, I suspect I am accurate. That means further downside for crypto versus tech, and tech is going up now. What happens if it starts to go down? Look at these spillers, pennants. Look at this. Don't forget, we're not perma bears. I get so many guys, bearish as usual. No, stay the macro, and the macro often doesn't change for a while. That's why it's called macro. Don't forget, we called this head and shoulder. We called this falling wedge and a break to the upside, my friends. Don't forget, we called this little fractal inside the much larger first copper gold nugget long. The major macro calls, we're generally accurate. This is not bottoming. You're going to do what you're going to do. But listen to what we've said, take it into account, and then make your own decisions up. Also, go to themarketsniper.com. Book a call, costs nothing, and the guys are very cool and easy to chat to. You could be building wealth in reset times, and it's also not what you make, it's what you keep. How many of you have had high watermarks at crypto and then washed out tons of that money and then gone and paid taxes or capital gains on money you no longer have? Oh my God, that just makes me bleed out of my eyeballs saying that. You should not be in that position. Anyway, so that's a little bit about that. Let's have a look at ETH, because he's been this poster boy on the big caps. Remember, we don't talk about micro caps. We don't talk about micro caps to you and then have massive positions and dump them like other YouTube channels. We spend most of our time talking about the top 10, the top 15. So one scenario where ETH, which will rely on Bitcoin, could become big, and I did this for the community a while ago. So is there a bull scenario potentially for Ethereum? The bull scenario could be this. The 2000 mark becomes a localized neckline. That was your beautiful inverted HVF, by the way. You spilt like a monster out of this one. You broke that bagel, as we felt you would, and that came at Bitcoin. Massive. You bounced on that 2250 level. Bounced up, and then a huge rejection candle. Nice little inverted. You spilled. You made another little inverted, and then you absolutely died down to the next key level of significance. 2250. This is all on the 2K. This line is your 2K level. That little squeezy is on the 2K. Then you try to recapture it. You failed. So once you squeeze around it, you break below it. Then it's resistance. You wound up. You spilled to the next key level. That was the $1,000. One scenario, just for the friends that call me Perma Bear. One scenario, if we're wrong on Bitcoin and it actually holds its own and actually starts outperforming the tech stocks, if that were to happen, which it's showing no sign of doing, you could have and this is only showing on Ethereum for now, you could have that as a right shoulder. You see that little dip, and the neckline is the pink line here. You could have that as a head, but there's so much that has to happen. And can I point out, you spilt much harder. You're grinding up here. It makes a difference. But you could get that sell-off out of the wedge. You could get that right shoulder. Then you need to return to the 2000. And you ideally need to not go lower on the right shoulder than you do on the left shoulder as well. So that's why I drew that line like that, something like that. Then you get back here. Then you can be a buyer and you can talk to me about a very big target, at least 1,000 to 2,000, at least $1,000, and you could probably take it from the 880s there. But Bitcoin will have to be going up. I don't think you're going to continue to get divergence from ETH, because generally Bitcoin is a god market. We have short periods sometimes where you have alt runs and Bitcoin is benign and drifting up. We have occasional periods where Bitcoin is going up and the alts are still soft, which is usually at the beginning of resumptions of bulls. But sometimes you get the odd alt that leads that. So we had ADA from, 4 or 5 cents, a couple in 2019 start running. But there was a lot of hype, much like Ethereum is now. But look at it today, a little bit off, a little bit soft. So the ETH dominance is now in the thick of the big numbers. It's at the higher levels now. So we're just going to have a look at this period. 20%, back above the 20%. And we're on the daily here. You can see it. Down, reversal, back up here. It's quite close to localized highs, and it's in a rising wedge. I'm not going to bet on too much higher at this point, especially if crypto starts to take a dive, especially if NASDAQ, which is being firm on peak inflation calls, Bidenomics, suddenly starts to see the disinflationary effects of China. More and more of that news is seeping out. More and more people are realizing that there's big trouble in little China, or little bits of trouble in big China. It depends how you want to think about it. So that's your ETH DOM, and this is the best, one of the best. I've reminded you before that Binance has been a relative overperformer, and it's also a possible candidate at some point if we are wrong and the falling wedge takes place, and you then subsequently have a dip, but not too strong. So you might just do a small dip on the likes of Binance and Ethereum, and then you get back up to that 330. I would go 333, the Satanist, for your neckline, or 330. It's all good. So that could also have been, and we've warned that Binance has been an overperformer. Okay, so that's it. Guys, please hit us a like. We appreciate that. It helps us on the algorithm. This is for free. I'm on, touring, working holiday to some degree, but I love to keep up to date in the markets and talking to the community about a number of things, and some of which I'm sharing now with you. So from a beautiful Cape Town, smelling the weeds and the sea, and there's Lion's Head. It's a bit in the sun, you might not make it out. Lion's Head, that little mountain there, 12 apostles running that way. I say goodbye to you, enjoy yourselves, but be careful out there. Dollar is looking like it's gaining something. It's just had a major move. It can pull back, so we'll finish again on that dollar, just to bring you into perspective. It's had a major move out off a low. It can have a pullback, but you should suspect ongoing strength, which probably means Eurozone weakness and probably some more weakness to filter through on the Asians as the China situation gets worse and worse. Look at that little koi carp. They're so tame and so big you can literally go pat them on the head in that pond. I should probably walk you down there. Maybe I'll do a video from there. So have a great time. Good to be chatting to you, and we'll speak again soon. And don't forget, shares are real currency for us. We appreciate it. Thanks for now, and that's my crypto update. Bye.